All right, good morning, Checkmate crew. It is Tuesday, October 18th, 2022. It is 9:30 a.m. Opening bell, New York Stock Exchange. Yours truly, Mickey Blindside here with your market memo. So guys, hey, we're seeing a little bit of a rally here. It is options expiration week after all. We've been saying that there's a lot of in the money puts, and I said, hey, there is a decent chance that we get back to delta neutral, which is around this zone right here, 3,900 to 4,000 zone. So that it looks like that's what's going on right now. Puts are getting sold off, hedges are getting cashed. We'll see what happens. Okay, we will see what happens. Last week also we also had the S&P 500 close below the 200-week moving average. And guys, if you haven't done so already, on our YouTube channel, you can go to our channel page. And on the channel page, we have the special sessions right here. It's one of the playlists that you could play. Over the weekend, I published a video. It's called Special Session of Market Memo, the SPX and SPY after crossing the 200-week SMA data and history. I recommend you guys take a look at that. I do offer some interesting statistics on what usually happens to the market after we close below the 200-week moving average. And the reason why I did that was because, of course, you know, all the Twitter army, they were saying that this is massively bearish. We're going to have a margin Monday. The only margin call that happened on Monday was all these people that bought 0 to 2 day till expiration puts. I think something like last week, 60% of all SPY options, SPY options, were 0 to 2 days till expiration. So those guys got wiped out. Of course, no, I'm not trying to be bullish in the short term or anything like that. But you know, again, when you act without an edge, that's where you can open yourself up to those large losses. And again, I am neutral and in the short term with a slight bearish bias because of our liquidity data, you know, our junk bonds ADL, our New York Stock Exchange high-low line and all that. But I will still buy puts if our liquidity data remains weak at 41.25. And I think that's where our real edge is once we get above the delta neutral zone on the S&P 500. For those of you who are day traders, a short at 3,900, a small short at a day trade 3,900 may not be a bad idea. Again, if you are inclined to day trade in this environment, I am not. I will not be buying puts at 3,900. I'm still going to wait for 41.25. But as a day trade, you may want to, if you guys are into that, you could short at the first touch of about 3,900 or so. That's when we start getting into delta neutral territory in options positioning for the S&P 500. Okay, so again, day trade 3,900. You could attempt to short there. Again, for me, I'm not into those types of short-term trades in this environment. I'm still going to be waiting for 41.25. And we will see what happens if we get there. Okay. Does it mean it has to get to 41.25? No, it does not. Okay, I might miss out on the trade, but I'm okay with that. I'm okay with missing out on that trade as long as my reward to risk is stacked in my favor. So again, 41.25 for me. Nothing has changed for my plans. I'm still short those 366 puts on SPY. Like I said, I would be at this line. If we're over VIX 32, I would short some puts for assignment. It looks like I'm going to, looks like I'm going to be cashing out of that. It doesn't look like as if I'm going to get a sign. Who knows? We could happen next couple of weeks. Maybe we see an undercut. It's very possible. But my levels still haven't changed. We were just whiskers away from me just buying shares outright about, 3 or 4, a couple percentage points away. I still want 340 to 345 to buy shares outright at this zone right here. All right. And these lines are valuation lines. Remember, I've talked about this before. These are valuation lines based on certain multiples in the market, based on interest rates. If interest rates go up, multiples are going to contract. And so that is my plan on the S&P 500. Speaking of earnings, we've been seeing some surprise earnings to the upside. Bank of America had very good earnings, as well as Wells Fargo, JP Morgan, not just the banks, but also the airlines too. Delta Airlines, they all had pretty good earnings. All right, well, better than expected, better than feared. That's the word I'm looking for. Better than feared. That is what the media is saying. Okay. There was no real proof that, their last quarter costs had gone up, but I think a lot of people overestimated how much earnings would shrink. It doesn't look like earnings is shrinking at all, okay? So here's what happens. If earnings estimates get guided higher this quarter, those valuation lines could change, in our SPY, SPX chart, okay? It is trending up because right now earnings forward guidances are being pushed up ever so slightly, okay? Could it go faster? I mean, it could. I don't expect it to, and I won't know until the end of earnings seasons. We just started earnings seasons, guys, so it's going to be, it's going to be a few weeks until we know exactly what the forward guidances are from all these earnings, okay? But it is something to look at. I will be changing these valuation lines if the earnings landscape changes, but I don't see any proof of that so far. For those of you who are short-term gamblers, if you guys, I do think that tomorrow, Netflix is reporting earnings tomorrow, or maybe today after the bell. So if you guys want to play an ER lotto, you can go ahead and do this. I am not. I'm staying away from all this stuff. I'm just going to act wherever I have a clear edge. Okay. Speaking of edge, let's go over our plans here. UUUU. I mean, wow, this thing really just doesn't want to come down, does it? I still have those collar trade, and it is testing my covered call at 7. We'll see what happens. The protective puts are all but gone. We'll see. I think UUUU has a earnings in the first week of November, if I recall correctly. I might be wrong about that, but I do think they have an earnings call coming up. Hopefully it backs off away from there after earnings. That's what I'm really hoping for, because I really don't want to get my UUUU assigned away from me. Although if it does get assigned, I do lock in a 16% profit overall. But still, I'm in it. I want to be in this for the longer term, but we'll see. I'll see what the market gives me. Okay, so that's UUUU. HUT is it broke over 2. Now it's coming back down. We'll see what happens. I think if the market rally continues, we could see this keep going up. If we get to around the 2.5, 3 zone, I will be looking to sell some covered calls as long as our liquidity data remains weak. And we'll take a look at our liquidity data soon here. But I'm just going through our plan right now. Pilgrim's Pride, not the pride of my portfolio. It's the shame of my portfolio right now. I did get in at 28.50. Oh man, it is not performing as what I thought. It is what it is. I only did the initial buy. I did not buy any more. Do I think I'm going to leg in some more or not? I have no idea yet. I did not think that it was going to come down all the way like this. So we'll see. We'll see. Right now, my position is very small on PPC. We'll see what happens, okay, with PPC. All right. Some of our other plans that we looked at Ford. Ford, it looked like, for Ford, I didn't keep my discipline. I should have bought some shares right here, like I said I would, but I didn't. I got scared. Even all that bearish talk that got to my head, it even got to my head. It made me change my plans on some of these stocks. I don't know if we'll see any lower levels. But I remember I told you guys after that news came out of their costs increasing that I may wait for the under 10, like around 9 or so. I'm sticking by that for now, but we'll see. Okay. It does seem as if I missed out since I didn't act on my original levels, but it's only been 3 or 4 days. So we'll see if that continues or not. That's F. Intel, I don't want to buy Intel as long as TNX is still going up. I need to see TNX dropping for me to get involved in a tech stock. So my plans still haven't changed for Intel. For tech stocks, I'm waiting for our MOAB, the mother of all buy the dip signals from our liquidity data, before I act on this. All right. So those are the plans. The miners. I said that I would like to get into the miners. Yeah, some of these miners, I mean, it popped up. That level, that 2775 level, that was a great level. And again, I got spooked out. I didn't want to get involved. But we'll see. We'll see, okay? I do think it's a very good chance if the dollar keeps going up, we could see this go down. It's really dependent on the dollar right now. Silver, I am more inclined to buy the silver miners. The only problem with the silver miners is that the SIL ETF doesn't have the 840 day option, the January 2025. It doesn't have that. GDX does and GDXJ does. So I don't know. The safer thing to do would be to buy GDX. The junior gold miners can be a little bit temperamental. It does move a little bit more, but GDX is a little bit more liquidity as far as the options chain is concerned as well too. So, not yet though, not yet. I really want to see the dollar stabilize a little bit, and I want to see some of our liquidity data change before I start buying into some leaps. All right, because if it chops around. Okay, like if it chops just around like for a couple months, those leaps are going to go down in value. Okay, because they're so long dated that the IVs are kind of high, and so if it just chops around and just churns for a couple of months, those leaps are going to lose value. So I don't really want to. I really want to get the edge of price structure. Like again, I'm looking for lower levels to enter. It didn't quite get all the way down, all the way that I wanted it to. But if it does, I will be looking to get long in a leap strategy with some miners. All right. Speaking of liquidity data, let's go ahead and take a look at that. Let's see here. All right, TNX. I think this is still the chart of the day. If TNX keeps going up, we are going to be in a situation where the tech stocks will not be in favor. Okay, if this keeps going up, tech stocks are going to keep coming down. All right, it's simple as that. Multiples shrink if this keeps going up. Now, if this comes down, I think all of the stock market will like that. Right now, this is the chart of the day. I've been saying this for like a week now. This is the chart of the day. TIP TLT, this is still marching higher. Okay, so I don't know what's going on, but the inflation expectations, it looks like it's going up. This going up favors the Dow over the NASDAQ. All right, and as evident in our growth to value chart, IVW, IVE, it's been trending down. So in this environment, generally, we see Dow stocks doing better, okay? So value stocks outperform when this is trending downward. So we're seeing that here. All right. As far as our liquidity data is concerned, let me go ahead and update. So this is starting to flatten out our New York high-low line. It's starting to flatten out. Actually, today it looks like our New York high-low is positive at the open. We haven't seen a positive open on the New York high-low for a few weeks now. So let's see if it becomes positive. If it starts curling up, that would be a positive liquidity signal, at least in the short term. The New York AD line has already come up for a couple of days. Also, our equal weighted S&P 500 actually never closed and never made a lower low. It actually made a higher low, and now it's springing back up. Okay. Junk bonds AD line also finally made a positive advance yesterday by 293 issues. So we'll see. I mean, usually I like to see 4 days in a row before I say, okay, junk bonds ADL is improving. So it's day one. So let's see what happens for 3 more days. Okay, let's see what happens in the next 3 days. What's HYG doing right now at the open? HYG is gapping up. Okay, interesting. Okay, it's gapping up, so we'll see what happens. Our liquidity data is stabilizing. Okay, so all the things are stabilizing. 5-year yield is dropping. It's not, well, at least it's not going up higher anymore. 2-year yields are also dropping as short-term yields fall. All right, and again, it's that ZF chart. As it goes down, it's dash for cash, and then if it goes up, I think that if it recovers these levels and goes a little bit higher, we might see participants entering back into the stock market. As yields drop, it becomes less and less favorable to buy 2 or 5-year Treasury notes. But we'll see. And again, I think the chart of the day is still TNX, the 10-year. 10-year, this is going to show us where multiples are going to go. If this goes up, multiples contract. If this goes down, multiples will increase. All right. So that's what I'm seeing so far today. Oh, speaking of plans, remember our Japanese yen? Oh, it's a good thing I didn't buy this. It's a good thing I didn't go long on the Japanese yen. That would have been a disaster. But this is starting to look like some type of meme coin, doesn't it? Like it's just dropping so quickly. But no, this is the 3rd most used currency in the world. This is Japanese yen. This is not some like meme coin, all right? But the chart kind of looks like it, doesn't it? But yeah, this was definitely a JOMO moment right here, a joy of missing out. I'm so glad I missed out on this. We'll see where it goes. At some point, though, I do think it goes up, but we will see. All right. Actually, we talked about I don't know, a few weeks ago that the possibility of a pivot exists. You know what? I'm starting to see that more and more in the media too. On Bloomberg, I noticed that right now there is some, quote unquote, momentum is building for creating Treasury bond buyback program to help with market functioning. Okay, so it's already now the mainstream media is getting catching on to this. We brought it to you first about a month ago. It was one of our special sessions, another special session, just a few weeks back. It's the one before we did over this last weekend. So again, you can go to our YouTube channel, look at our playlist, go to our special session playlists. It's one of the videos there. But we had a thesis on why the Fed may have to pivot. And that pivot comes in many forms. Just because I say pivot doesn't mean that I believe they're going to cut interest rates. On the contrary, they may keep interest rates higher, but what they might do is some type of bond buying or yield curve control where they buy some of these longer dated bonds. All right. We'll see when that happens. I mean, I'm not going to bet good money on when that happens. I think it's just a matter of when. And I think at some point we're going to have a solvency issue in emerging markets. We've got a lot of bond payments due still at the mid to end of 2023. Also, too, if we cut spending, and if we have a split government here in the United States, we have a midterm election coming up. If we have a split government, that usually means that government spending decreases because nothing gets done. There's gridlock in Washington, D.C. That doesn't affect the markets short term, although there may be some bond market implications, but that more affects economic growth a year or two down the road. So as we have a solvency crisis in the emerging market in the end of 2023, early 2024, maybe the effects of lower government spending also show up around that time. It could be, okay, it could be. I'm not trying to predict the future. I'm just trying to anticipate what could happen in the next, in the next couple of years. But we'll see what happens. But as far as, short term is concerned, my plans still haven't changed for the next quarter or two. I'm still looking at edges of our price structure to hedge on my overall shares and to accumulate long-term shares if we get an undercut of certain levels. All right. Crypto, I noticed that the open interest is actually increasing. Also, too, the gamma positioning went up. We're in gamma positive territory. So gamma positive territory, we could definitely see price just kind of just hang around in these gamma positive areas. We could just see it churn around in this zone right here. That's very possible, especially when gamma is this high. But a lot of that gamma positivity comes from the end of month options expiration. And I noticed that there were some trades that were going on for October and November. There's some shorter term trades happening in ETH. And I told you I wouldn't be looking at ETH unless we saw some changes in OI. Actually, we're starting to see OI actually come back up. Remember, it was at 5.4 billion. Now we're at 5.8. So over the course of the week, we had about $400-500 million enter the ETH options market and stay. And so let's see what happens. Okay, so it is back on an uptrend again. If we start getting into the the $6.5-7 billion zone, I think then the options market may reassert itself onto the physical market again. All right. So as you can see here, we see November's, October's, a lot more action. Oh, we're also seeing some puts here too. I didn't notice any large block trades in puts. Most of them were in calls, but let's actually take a look and see. Deribit, shame on you. It was just working right before. Sometimes it does this. Deribit does this sometimes. Maybe there's a lot of people trying to log in. Could be. As markets go up, retail gets giddy and they want to get in on the action. Could be that. Well, hopefully it works tomorrow. Hopefully I can show you guys tomorrow. Yeah, well, Deribit's not working. Okay, so it is what it is. All right, but yes, OI is increasing though. All right, OI is increasing. All right, and we're starting to see a little bit more action in the November and October options chains. So we'll see what happens. Volume by expiration, yeah, November 25th. That seems to be a big volume zone. I was hoping to see if there was any block trades in there, but Deribit is not cooperating so far. Anything you guys want to look at? Today's a short day. It's OPEX in the S&P 500 world. We're already giving up some of the gains. Let's see what happens. I think again, I'm not going to be taking this trade, but if you guys want to be day traders, I think 3,900 right as we get to delta neutral. That might be a good day trade for some of you guys to short. But me, I'm going to wait for 41.25. That's where I'm going to buy put spreads 1 to 3 months out. Nothing has changed in that plan. I still have my short puts for assignment here at 366. I am going to buy shares outright at 340, 345 on SPY. And nothing has changed in that plan, okay? So that wraps up the morning memo today, and links are in our description. Our links to join our Discord is down there. Come be a part of a growing community. No sub fees, no paywalls. Is of the people, by the people, for the people. If you enjoyed our video, hit like, follow, subscribe, comment, show us some love, baby. I'll see you guys tomorrow at 9:30 a.m. at Market Open. Hope to see you guys there.